The opening range breakout. It's everywhere right now. YouTube, TikTok, every trading Discord you've ever joined. Draw a box around the first 15 minutes, wait for breakout, print money. Except you tried it, and it didn't work. You drew the box, you waited for the breakout, you entered the trade, and then price reversed, stopped you out, and kept going the other direction. You're not alone, and you're not doing it wrong. The strategy is broken. But here's the thing, it's not broken because the concept is bad, it's broken because everyone's using the same settings, the same time frames, and smart money knows exactly where the stops are sitting. Today I'm going to show you two fixes, one that filters out the noise and one that changes the math entirely. 5 extra minutes and a way to get paid even when you're wrong. Let's start with what most people get wrong. Quick recap for anyone who needs it. The opening range breakout is the price high and low that forms during the first few minutes of the trading session. Most traders watch the first 5 minutes, the first 15 minutes, or the first 30 minutes. You mark the high, you mark the low, that's your range. When price breaks above the range with confirmation, you go long. When price breaks below with confirmation, you go short. Stop loss on the other side of the range. Simple concept. The first 15 to 30 minutes is where institutional money starts making moves. Catch the breakout, ride the momentum. That's the theory. Here's the reality. The ORB 5 and ORB 15 strategies have win rates in the 30 to 50% range. That's not an edge, that's a coin flip with extra steps. Why? Because institutions know retail traders use these levels. Think about it. Millions of traders around the world, all drawing the same box, all placing stops in the same place, all waiting for the same breakout. If you're a market maker sitting on the other side of that trade, what do? You fake the breakout, you trigger the stops, you grab the liquidity, and then you reverse. It's not a conspiracy, it's just mechanics. Liquidity pools form above and below obvious ranges. Smart money sweeps that liquidity before the real move. The 15-minute ORB is the most taught strategy on the internet. That's exactly why it's the most exploited. So what do? You add context. The basic ORB strategy has no filter, no trend, no structure, just a box and a prayer. The first fix is confirmation. Don't enter just because price broke the box. Wait for the breakout to happen on above average volume. That tells you buyers or sellers are actually committed, not just probing. Wait for a candle to close above or below the range, not just a wick, a full body close. That's conviction. And if you miss the initial breakout, wait for the retest. Price breaks out, comes back to test the level, holds, and then continues. That's your confirmation that the breakout is real. These filters alone will cut out half the fakeouts. But here's where it gets interesting. What if the problem isn't your confirmation? What if the problem is the time frame itself? I ran the data. 250 days of SPX trades. First breakout only. No fancy filters, just the raw strategy. ORB 15, 77% win rate. That sounds good, right? But watch what happens when you add 5 minutes. ORB 20, 85% win rate. Same market, same instrument, same basic strategy. 5 extra minutes, 8 percentage points. But that's the long term. Let's look at the last 30 days. ORB 15, 76.7%, 23 winners out of 30. ORB 20, 93.3%, 28 winners out of 30. That's 16 percentage points from a 5-minute difference. Why does it work? Because 15 minutes is predictable. Everyone's watching it. Everyone's trading it. The fakeouts cluster in that window. 20 minutes lets the initial noise settle. The liquidity sweeps happen. The fake breakouts fail. And by the time the 20-minute candle closes, the real direction is clearer. 5 minutes. That's the edge most traders are leaving on the table. But I didn't stop there. Here's the question nobody asks. What if you could get paid even when you're wrong? Most traders think about ORB as a directional play. Break above, go long, break below, go short. You're betting on direction. But direction is hard.
Even with 93%, you're still wrong 7% of the time. What if instead of just buying calls or puts, you sold a credit spread? Quick refresher. A credit spread is when you sell an option and buy a cheaper one further out to cap your risk. You collect premium up front. Time decay works in your favor, and you don't need price to move much. You just need it to not move against you. On an ORB 20 breakout above the range, instead of buying a call, you sell a put spread below the breakout level. You're betting that price won't come back down, and you're collecting premium for that bet. If you're right and price holds above the range, the spread expires worthless. You keep the premium. If you're wrong and price reverses, you have a defined max loss, and depending on how you structure it, the premium you collected might still offset most of that loss. You're not just trading direction anymore, you're trading probability, and you're getting paid to be patient. I did a full breakdown on how to set up credit spreads in another video, link in the description if you want the deep dive. But the concept is simple. ORB 20 gives you the directional edge. Credit spreads let you profit from that edge while reducing your risk. Let me show you what this looks like. This trade, $22,203, 47 minutes, one ORB 20 breakout. Price broke above the 20-minute range with volume. I sold a put credit spread below the breakout level. 47 minutes later, the trade hit target. Most of that time, I wasn't even watching the screen. I let the setup alert me, placed the spread, and waited for the math to work. That's not luck. That's not a one-time thing. That's data. 250 days of it, 93% over the last 30. A system that works whether you're a new trader or you've been doing this for years. The ORB strategy isn't broken. It's just being taught wrong. ORB 5 and ORB 15 are predictable. Institutions exploit that. The win rates prove it. ORB 20 lets the noise settle. The data proves it. And credit spreads let you get paid even when you're wrong. The math proves it. 5 minutes, 16 percentage points, and a way to profit whether the trade works or not. That's not a strategy. That's an edge. I trade this live with my students every week. If you want to see how this works in real time, send me a message. Links in the description. And if this changed how you think about ORB, hit subscribe. I put out data-backed strategies like this every week. Stop drawing the wrong box.